I do think that they need to up the price. Warner Brothers Discovery, of course, the main concern that they raised was financing, but they also called the proposal inadequate, inferior to Netflix, and illusory. The inadequate really stems from the fact that they feel that Paramount Skydance is undervaluing their TV network business pretty substantially. Plus, they also talk about the extra almost $2 a share that they would need from Paramount if they were to walk away from a Netflix. This is to cover both the termination fee that Warner Brothers Discovery would owe Netflix, as well as some of the financing costs. So there's all of that. You kind of put all of that math together, and we come up with at least a $32.50 increased bid that Paramount would need to present in order to kind of get the Warner Brothers Discovery board back to the table. So yes, the financing helps a little bit, but not sure it really changes the conversation.
We haven't heard a whole lot from Netflix recently. Are they just quietly sitting on the sidelines and confident in their bid?
So they did, put out a letter to employees, shareholders, just kind of reiterating their commitment to the deal. They think that it will go through. They don't think they will have, huge problems with the regulators. And it was interesting today, even in the Warner Brothers Discovery letter that they put out, suggesting that, they don't see, rather that they view both of the deals as equal from a regulatory perspective. And one of the key numbers that they highlighted, the Warner Brothers Discovery team, was the $9 billion in synergies. So Paramount Skydance basically talking about $3 billion in synergies from its Skydance deal, $6 billion from the Warner Brothers Discovery deal, saying that will actually put a lot of, that's bad for Hollywood.
Sure.
It would result in a lot of job losses, whereas the Netflix deal might actually be better. So who knows?
Who knows? And I mean, this is something that's going to play out over the next 1.5 to 2 years. Geetha, we know that Jared Kushner, the president's son-in-law, his private equity firm Affinity Partners was involved in the Paramount Skydance deal. It was supposed to contribute $200 million to the financing, but it has since pulled out of this bid, perhaps because of potential conflicts of interest. Does this change the scope of Paramount Skydance's offer? Does it make it more attractive, less attractive, or does it not really do much?
I think, yes, you're right, Scarlet. The optics were definitely bad, and it kind of, looked a little bit questionable. So now they're kind of removing that, which is definitely good. I think it's more positive for the Paramount Skydance deal. That said, though, I think they really, really need to deliver a knockout bid, and the knockout bid that we're kind of looking for is something like $35. I think that really then gets Netflix thinking about, okay, do we need to re-up our offer? And everybody gets excited at the Warner Brothers Discovery board again. Until they do something really significant on the pricing front, I don't think the Warner Brothers Discovery board is going to want to come back to the table to re-engage.
Geetha, one of the comparable deals out there for a spin-off of Warner Brothers cable networks is what Comcast is spinning out its cable networks into a company called Versant. Is that publicly traded yet? Have they done that spin-out?
Yeah, they did. They have a when issued trading. The actual the complete distribution will happen sometime in January when it'll start trading. But we do, with the when issued trading, we do have some price discovery for that stock. So right now, if you kind of look at where Versant is trading, we get a forward EBITDA multiple of about 5.2 times, which is higher than what Paramount Skydance had suggested for the valuation of the Warner Brothers Discovery at 4.5x. So already there, we're kind of seeing some signs that the valuation of the global networks business should be slightly higher.
Do you see any other M&A taking place in media? I know we're all fixated on the bidding war for Warner Brothers Discovery, but at one point, Comcast was a potential bidder, and it dropped out fairly early. But are there any other deals kind of percolating in the background that you would keep your eye on?
I think there's just a lot of consolidation that's waiting to happen, Scarlet. I think people first want to wait and watch a little bit, see what happens with the Warner Brothers Discovery situation, kind of test out what's happening with the regulators. But yeah, there are absolutely a lot of smaller players, and Netflix becoming bigger or Paramount becoming bigger really kind of forces everybody to take a hard look at their portfolios and see what they should do next. As you rightly mentioned, NBC is the one name that definitely comes up to mind, Comcast, NBC. they need something. Their Peacock platform is really subscale, so it's really going to depend on whether they want to do some kind of partnership or they actually need to go out and acquire some other smaller networks, maybe AMC networks, maybe some other kind of streaming business. So a lot of deals waiting to happen, but I think this is really the big one that everybody's focused on at the moment.